Hey, Bulls and Bears, what is happening? JJ here. You're watching Bull Boom Bear Bust, back with another dose of economic reality. And we've got a lot to get into today. You may notice the sunglasses. I've got a little situation going on with my eyes. Doesn't matter. The news is what matters, right? You guys don't care if I wear sunglasses, right? What does it matter? Anyways, let's get into the news. We've got a lot to cover. So we've got so many things to try to keep an eye on, to try to focus on. And one of those things is the strike with the automobile workers. The UAW officially went on strike. Now, I'm recording this right now on Thursday night. It's about 11 p.m. You're watching this probably on Friday. I'm not going to put it out at midnight, so I'll probably put it out Friday morning. But as I'm recording this, the deadline has passed. UAW strikes begin as deadline passes with no agreement. Why is this important? Well, we've been told that there's a vehicle shortage and that prices have skyrocketed because of a shortage. Well, there's been a few people out there, more than a few people out there, that have tried to uh, prove that being wrong. They've tried to disprove that by showing some car dealers that have a lot of excess inventory, but they're putting these vehicles in overflow lots. And now with the commercial real estate collapse, so many vacant commercial buildings, there's plenty of lots to park these vehicles at. I would be a little bit wary, though, of security and somebody coming in to steal these vehicles off the lots if I was a car dealer. So I wouldn't want to just leave hundreds of vehicles parked in a lot somewhere without it being fenced in or guarded, especially here in California. But the strike, and we've got some other news out of Taiwan, and we know that Taiwan is the #1 chip manufacturer in the world, and that was something else that was blamed for being a reason why car prices shot up so high and so fast. We've got headlines like this here recently. China deploys over 40 planes to Taiwan Strait, massing forces at coastal military bases. That was Fox. We've got Reuters. Taiwan reports 40 Chinese military aircraft in its defense zone. And considering the cost of living crisis that's happening right now, and the delinquencies are rising for automobile loans, considering all this, this is pretty big. What if both of these happen at the same time? What if there's some sort of conflict with Taiwan and the chip manufacturing maybe gets shut down or delayed, or who knows? What if the strike happens at the same time, and we could see vehicles, the cost of cars and trucks skyrocket, even used ones, because the less new ones are manufactured, the more the demand's going to go up for new vehicles. And if the price goes up in new vehicles, then more people are going to look at used vehicles, and then the price could go up there as well. Now, this is happening at the same time, though. We have delinquencies rising, unaffordability at near all-time highs for vehicles, consumers getting tapped out, right? So we have a lot of conflicting forces here, opposing forces. What's going to happen? I mean, please let me know what you think down in the comments. So car prices actually started coming down. We're about down 7% year over year. And a lot of that is just people, even though they're borrowing money and taking out big loans, they can't keep up with these loans forever. Look at the gas prices right now. We're going to talk about core inflation and the recent number here in a minute. By the way, I didn't put out a video yesterday. I went to the dentist, and I don't know if that's what caused my eyes to get messed up, but had a little work done, nothing major. And I felt really tired after that. I don't know. I'm not blaming the dentist. I'm not blaming whatever they shoot into your gums to kill the pain. I'm just saying that I felt really tired after that. Anyways, let's move on here. So core inflation up again. Producer prices basically are continuing to soar. Inflation is reigniting. CPI came in 3.7%. Now, this was recent news also that consumers spent more than expected in August. Well, why do they spend more? Well, a big part of it is because gas prices are higher. So they're trying to twist, something that's negative, people paying too much money for gas, into a positive. Oh, look at consumers. Look how rich they are. They spent more than expected. And, supposedly that's good news for the markets. The consumers are strong, right? In the meantime, we've got debt piling up in the background like we've never seen before. And this whole thing is being financed with debt. How many people would even be able to drive right now if it weren't for their credit cards? I don't think many. U.S. CPI inflation jumped 3.7% in August, more than expected. I mean, we talked about it right here. We expected it to go up. Oil goes up. Look out, folks, because everything's going to get more expensive. Products manufactured by oil and gas prices, of all the transportation, all the goods delivered, combined with everything else here. I mean, we've got an inflation nightmare in our hands. And some people say 3.7 is not bad. Remember, though, that's a year-over-year number, 3.7 over last year's number. Remember the summer of 22, we were up at, what, between 7 and 8%, if I remember correctly. I don't know the exact month, but I know in the summer we hit right around that point. So we're almost 4% higher than we were then, and even then it was really bad. So in order for things to get better, remember we need a negative number. Negative CPI print means prices are actually coming down or lower than they were last year. So even a 1% CPI reading is bad. That just means prices are higher than the year before, which was a ridiculously high number. So even 1% would have been bad. And this is 3.7%. Consumers in all-time high debt, credit card delinquencies rising, car loan delinquencies rising. Nothing massive yet. It's not a exploding or skyrocketing delinquency rate, but it is increasing at the same time as savings continues to hover around near all-time lows. We're talking about the savings rate, how much people have left over, how much is in their accounts after their monthly bills, and it's near all-time lows. Now, it did shoot up a little bit over the past few months, which was surprising, but it didn't shoot up very much. But then when we looked at something else, it wasn't surprising. We found out that people are basically looting their 401k and retirement accounts at record levels, right? So the reason for the savings, the slight savings uptick, it's still really bad. It's still near all-time lows, but the reason for the slight uptick could have very well been all these people raiding their accounts. And you know, when you quit your job or when you get laid off, you can then take your retirement out that you had saved up with that company. You're going to pay a big penalty to Uncle Sam, but you can still take it out at that point when you're no longer with the employer. And I think that's what a lot of people did. And we reported on that right here a few months ago, how so many people were taking money out. Some of it was for emergency loans. Other was to pay off debt. So this is all starting to add up to making it very clear on where we're headed in this economy. Just drove past the gas station earlier tonight on my way to the store to pick up a few things. $5.50 a gallon here in my neck of the woods. So wow, a lot of pain out there for people. I feel sorry for people that have to commute long distances. If you're on the freeway, you might get a little bit better gas mileage, but stop and go, people that have like long commutes, especially city driving for a long ways, a lot of stop and go, you're really going to be burning up a lot of dollars. Burning through those dollars very, very quickly. Also, people spending more, a lot of it spending more, in their tanks. More indicators here that things are slowing down pretty dramatically here. Used towable prices, we're talking about RVs and the ones that you tow, campers, travel trailers, fell 13% in a very short amount of time. In June, prices for travel trailers and fifth wheels at wholesale auctions averaged a bit over $25,000. In July, the most recent reporting, those prices dropped to $21,750, folks. That's a 13% drop in 1 month. Now, this is a recent report here out of RV Travel, and this just came out on the 13th, which was just a couple days ago. So I'm sure the August numbers will be out here anytime. We'll take a look at those when those come out. But a 13% drop in 1 month. Wow, can you imagine if that happened every month now until the end of the year? You'd be talking about half-price campers and RVs by the end of the year. Is that even possible? Will that happen? 13% in 1 month. Wow, 4 more months left in the year here. And yeah, that would be a 50% drop if that happens every month. I don't think it's going to be that bad every month. I think the 13% is compared to a much higher number in June, because typically May and June are the hottest months for people buying RVs and towables and campers. So it could have been an elevated number that they were comparing it to. But again, we'll keep an eye on it here. But that's a big drop nonetheless. You've got to admit that. Let's shift gears a little bit here. Another FDIC insured bank is teetering on the brink of failure, closing at 27.5 cents per share. Wow. That's down 96%. This is another bank with Republic in the title. This is Republic Bank. Remember, we had First Republic. This is a different bank, but with Republic in the title. Republic Bank. As of June 30th, this bank had about $6 billion in assets. It has 35 locations through Pennsylvania and New Jersey. More than half of its deposits were uninsured in SEC filings. So, folks, what do you think about that? Is there another bank on the brink of failure? We'll have to wait and see, but it's going to be very interesting to keep an eye on that here. Commercial real estate. Delinquency rate has jumped 56% since January, folks. We're in the middle of a commercial real estate I don't want to say crash because crashes typically don't happen in housing and real estate, even though they do call the 2008 housing correction a crash. It really should have came down a lot more. Remember, the bailouts happened and prices bottomed pretty quickly. Once they dropped, they didn't climb up very quickly at first. But then, of course, with 10 years of rock bottom interest rates, we all know what happened after that. We're in a bigger housing bubble now than we were back then. Commercial real estate could be leading the way down this time, down 56% since January. So look out, commercial mortgage-backed securities. Delinquency rate jumped to 56%. We're going to see a lot more vacant buildings and warehouses and offices. And, what are they going to do with all these? They need to convert them to apartments, but that's a very expensive and time-consuming conversion to do that. Moving on here, another story here. And another not so good sign for what's ahead of us for this economy here. Wells Fargo came out and they said expect more layoffs. Wells Fargo could see its headcount decline further as it aims to improve efficiency, said Chief Financial Officer. There we go. Just more evidence that the demand is not there for loans. People are priced out of a lot of things. A lot of people still taking out pretty big loans, though, that they shouldn't be taking out. But then again, you still have this fear of inflation. What if we do get the conflict in Taiwan, the chip shortage? People are going to be wishing they bought a car if they go back up. It's really hard to imagine, what could make the housing market really go back up again. We've got these 1% mortgages. The most recent one was Zillow doing Arizona right now and expanding to other states. But even before that, we had other companies out there giving out 1% mortgages. And the guidelines right now are not that high to get approved. I know several people making between 60 and 70,000, and this is what I do for my job, that are getting approved for homes that are 450, 470, 490,000. So we're talking about 7 to 8 times their income, and it really shouldn't be like that, right? So I think we talked about this a few reports ago. Even back in the Great Depression, you could buy a home for 3 times your income. So things are so out of whack right now, but that's what happens when you have money that could just be flooded into the system, into the economy at the click of a mouse, right? So will we go back to sound money? That's the big problem. It's something else we're keeping an eye on here. We know the BRICS nation did not announce any new currency, and I knew they wouldn't. And remember, I said that right here in this channel. I said it's very unlikely that these countries are going to do the right thing when it comes to the monetary policy, right? Do you expect countries like Russia and China to do something that's going to be good for the people and to bring the cost of living down and actually back their currency by gold? So I was a big skeptic of the BRICS announcement, but it was in the news, right? So we had to talk about it quite a lot here. But we do know that these countries are going outside of the dollar, so it's something else we have to keep an eye on too, is de-dollarization, because that also affects us here. Another inflationary force to keep an eye on, folks. All right. So a lot to look at, a lot to think about, a lot to keep an eye on and think about here. So hope everyone's doing well. Hope you're prepared. Please consider having a 30-day emergency expense. Have some funds out of the bank, essential items, food, water, and just be ready for anything because, something big could pop off anytime, right? For lack of a better term, could pop off. And, we don't want to be caught on our heels or flat-footed. I continue to stack. I continue to buy silver, hedging against inflation. And remember, every time you buy precious metals, silver especially, you're fighting against a manipulated market, right? Because they're keeping prices suppressed. I'm talking about the central banks. They're keeping prices suppressed by shorting these derivatives or the paper market and futures, and they're buying physical gold, right? So what does that tell you? They're pushing the price down over here, but buying it over here, so they're ready for the price to explode. I think in the very near future, we'll have to see. I don't like to put certain timelines on everything, on anything, but I think we're headed into some very rough waters here, and we could see some dramatic things unfold here before the end of the year, but definitely in the next year. But I even expect something really big to happen before the end of the year, right? So we're going to keep an eye on it. We're going to get through this together. Please make sure you like, subscribe, come back to this channel so we can navigate this together, folks. Everybody, thanks for watching. Big love. Keep stacking. Bye for now, everybody. Peace.